I get a lot of calls. A lot of people watch the channel. A lot of people hear me on iTunes or Stitcher or through my Facebook groups, and got a lot of investors that have acquired a couple rental properties. Here are your main options, really. If you're bankable, you can get conventional financing for non-owner occupied properties, right? The other option is, if you're really rate sensitive, there are banks and credit unions that do commercial loans on portfolios of rental properties as well. So that's another option that you can look at doing. Some of the portfolio programs can do small multifamily within it, which is exciting. Usually it's 8 units is the cap. So if you have like a 7 or 8 unit multifamily property, you can fit in on this portfolio program and get 30-year fixed debt that doesn't adjust.
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. And now, your host, Beau Eckstein.
Hello and welcome to another episode of the Investor Financing Podcast. And today we're going to talk about how to finance your rental properties. And specifically, we're going to talk about 1 to 4 unit rental properties. I get a lot of calls. A lot of people watch the channel. A lot of people hear me on iTunes or Stitcher or through my Facebook groups, and got a lot of investors that have acquired a couple rental properties. Some of them paid cash. Now they're looking to figure out the best way to refinance this and pull some of their cash out so they can buy some more properties or pay off their hard money or whatever it be. But here are your main options, really. If you're bankable, you can get conventional financing for non-owner occupied properties, right? Those go in your name, and you're going to have to provide your tax returns, and they have their debt ratios and certain seasoning requirements, right? But you can get conventional financing, and ideally that's probably the cheapest cost of funds out there. But if your strategy is to grow a rental portfolio, you can do a portfolio loan, and that could be within your business name or entity, your LLC, corporation, or your trust. And that will not be reflected on your personal credit report if you're doing it with certain lenders. It's a commercial loan, it's a business purpose loan. It doesn't reflect on your personal credit score. The rates aren't as good, but they are pretty advantageous right now with rates being so low. You can take 2 or 3 of these properties that you own and get one portfolio loan in your LLC, get it out of your personal credit report and into this entity, and do a cash out refinance or a rate and term refinance. So that's a great strategy.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Are you in the market for a commercial loan? Did you find the perfect opportunity but need funding? Have a special situation? At Find the Bank, you will get quotes with competitive rates and terms from multiple lenders without any hassles. Have a multifamily property, construction project, owner-user property, industrial, mixed use, hotel? At Find the Bank, you can get nearly any kind of commercial financing. The process is simple. Once you send us some information about you and your property, we send back a quote sheet. Then we quickly connect you with an advisor. You won't spend hours calling multiple banks trying to find the right person to talk to. We'll connect you fast to the right person, hassle-free. Better terms than you could get on your own. Go to findthebank.com and complete the form. An advisor will be connected with you within minutes to discuss your specific financing needs.
The other option is, if you're really rate sensitive, there are banks and credit unions that do commercial loans on portfolios of rental properties as well. So that's another option that you can look at doing. But right now the rates are really, really good on the portfolio product compared to where they were a year ago or 2 years ago. That you can get relatively cheap cost of funds there, and it's streamlined. You don't need tax returns. So if you run a lot of losses and have a lot of entities and tax returns, you don't need to provide tax returns for these type of loans, which is another huge plus, especially if you're running losses, because you're not going to get bank loan because they're going to look at your global cash flow and they're going to most likely have issues with that. So there's a lot of alternative. The portfolio loans underwrite the deal based on the debt service coverage ratio of the portfolio, meaning that it's got to make money and be able to pay the debt by 20% or more or greater. And they also base it on loan to value and your credit score and experience. So that's how they price these loans. You can buy as many as you want. Doesn't show up on your personal credit report. A great way to facilitate your BRRRR transactions, and not the best rates that you can go get at Bank of America, but pretty darn competitive in retrospect. And you got to look at the end goal. You want to get 20, 30 rental properties, preferably not in your name, so that you don't have all these constant inquiries and different things. Many advantages to the portfolio rental programs for 1 to 4 units. And actually, some of the portfolio programs can do small multifamily within it, which is exciting. Usually it's 8 units is the cap. So if you have like a 7 or 8 unit multifamily property, you can fit in on this portfolio program and get 30-year fixed debt that doesn't adjust. It's not a 5 or 7 year fix and then it goes adjustable. It's a straight 30-year fix. So options out there, how to finance your rental properties. Please like, share this podcast, and I hope to see you on future episodes.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.